Welcome to another episode of Trading the Price. Today is January 19, 2018. In this video, I'm going to talk about Facebook. I'm going to show you a trade that I'm looking at, and also basically going to look at some of the price action on Facebook and see where are some of the price level that might be of interest. So let's go and take a look at the chart on Facebook. This is the daily chart here. As you can see, we have a trend line here that essentially seems to be providing a little bit of a support, in doing these intermediate term here, and also I have a little rectangular here. This is where there's a lot of trading occur, a lot of volume within this price range have traded. So basically, it's like a trading range, and it tried to break out a couple of times, and it finally did, on the earlier this year, at the beginning of the year, and went to a new high. Then all of a sudden, Facebook announced that they are revamping their stream to eliminate some of the news posting. And that might cause a little bit of a shortfall in revenue and profit in the future, and that's why we got this gap down here, right? But as you can see, there seems to be some support at this level here, where I have this price band, okay, near the 178 and 180 area. Okay, so right now it seems to be trying to bounce out and break out of this trading band again, right? This trading band. Now, be aware that the earning will be due in 2 weeks. So this trade is only going to be for the next week or so, all right? So we're gonna. But if you want to hold to earning, that's a different story. I don't trade to earning because it's just too much uncertainties there, right? But anyway, so we're basically looking for Facebook maybe move back up at least to this range here, somewhere around the 184 area, okay? And if it could move above this little resistance, this price zone here, then maybe it could get back into this area and maybe trying to retest the all-time high again. But in regardless, if we could get up to this 184 or possible, to the 186, that would be a nice move from the today's close at 181 and a quarter. Okay, so but the downside is if it come down, between 180 and 178, that might be still pretty good to hold support, and maybe we get a bounce back, so we just kind of chop around. But if it break below this 178, then we'll put this trend line back in play, and if this trend line break, then it could easily come back and maybe get to the bottom of this trading range. Okay, so that's the downside. This trade is involved that we're going to buy the it's basically involved in our option. We're basically gonna let me put up the trade here. Okay, so let me go to the table version. So essentially, we're gonna buy the using the January 26th, the next week's option. Would expire on next Friday. Okay, the reason is we don't want to get into the following week because that's when Facebook is scheduled to release earning, and we don't want to trade to the week of earning. We don't want to buy the option for the week of earning because the implied volatility is inflated, and we don't want to deal with that. Okay, so we want to get onto the trade before the earning week come, and that's why I'm basically buying the next week. What I'm going to do is I'm going to buy the 182.50 call. All right, so basically I'm buying it to break out of this box here, right, this trading range, and move up to this 184 and 186 area. right? And gonna pay 158 for it. Now these are based on today's closing price, right? So they could different on Monday, and you know the price action might be totally out of whack, that this trade is no longer valid. Okay, so just like the one of the trade that I described a few weeks back on Tesla, and when Tesla opened up the following Monday, it just blew that trade away, so there wasn't even a play on it, right? So but Apple, did good. Apple did kind of stabilize and bounce around a little bit and provide opportunity to get into that Apple trade that I described. All right, so again, these hypothetical right now. Okay, it's all depend on the price action, right? We just don't go blindly go and initiate these trade. So essentially, what I'm doing, planning to do, right, is to buy a 182.50 call, January 26 expiry, right, for 158. And what I'm going to do is I'm going to sell two 180 put, right, at 154, right, and what to define the downside risk and also minimize the amount of capital that you have to set aside, for as a reserve for the the margin. Okay, is I'm gonna go and buy the 175 put, right, at 43 cents. Okay, so that give me a $1.11 credit per per spread. This is basically I'm shorting the 180 175 put spread, right, the put vertical, right, for a credit of $1.11. Now what I'm going to do is I'm going to short two of them, right, so I get enough money to pay for this call, this 158. Then I also have money left, essentially 71 cents or 70 cents, close to 70 cents as a credit. So I'm basically going to be collecting a 71 cents credit on this trade, right? Okay, and the thing is also let's take a look at the curve. Okay, so here's a graphical representation. Now, if the price, when expiration comes next Friday, if the price is sitting between 180 and 182.50, basically, you just collect that 71 cents, pocket the 71 cents, and you lose nothing, right? Okay, so but if the price is below 180, okay, then you start incurring losses. Well, actually it's not below 180, is because we collected that 70 cents or 71 cents, so essentially 35 cents per spread we collected. So if it's below 179.65, then we start incurring loss, right, on this on the put spread that we sold, right? And the maximum, the width of that minus the credit that we collect, the maximum loss, basically on the both of those vertical put spread, put vertical is 929. Of course, we're not gonna wait until we're gonna get blown out, all the way down to that 175 level before we get out, right? Okay, but just in case there's some black swan event, overnight and something like that, and it gapped down to 160 or something like that, well, the maximum loss, that we're going to incur is 929, no matter how low it go. It could go to zero, right? It's still, we just basically lose 929, right? Okay, so that's one of the good things for, doing the put spread instead of just sell naked put, right? Okay, is you limit your downside risk and also minimize the amount of capital outlay to set up the trade. Okay, right? So that's basically what we're doing, and here's the some of the statistics is probability of profit is 61%. Okay, and the delta is 94, so it's almost like buying the stock itself, right? 100% delta, 100 delta is basically for every dollar move, this option trade will also move a dollar. Okay, so right now it's basically moving 94 cents to a dollar, so that's pretty close, right? Okay, so that's the trade, and So essentially we buying the 182.50 call, right? And we are selling 2 of the 180, 175 put vertical, okay? And then we collect 71 cents, right? So that's basically the option trade, and we're basically playing for the price break, right, above this this trading range, and move up to possibly to the 184 to 186 before the end of next week. I mean, it'd be nicer just to get up to that 184, right? So if it close today at 181 to 184, that's say $3 move, okay, for next week. So we could play for that, right? So that's basically the trade for Facebook. If you like this video and you find it informative, please click the thumbs up to give it a like, so so I know that it is useful. And if you're not a subscriber to my video channel on YouTube, click on the subscribe button on the lower right hand corner, then subscribe to my channel here. And you could also follow me at Twitter. My handle is smtraderCA. So have a good weekend, and thank you for watching.